Hello, listeners, and welcome to the latest episode of the Hemlane Hustle. Joining me today is Gavin Myers, the general partner over at Prudence Ventures. Prudence is a venture capital firm investing in the most innovative technology companies, leading the transformation of the built world. The firm invests across multiple verticals, including real estate, construction, infrastructure, and energy climate adaptation. In this episode, you'll learn more about the current trends of the prop tech space and what's to come for the future of real estate and built world. Gavin, I'm ecstatic to have you here. Welcome to the show.
Thanks, Dana. It's great to be here.
Great. Well, I know that many of our listeners have probably been following Prudence, your investments in real estate and the most innovative companies. Can you give me a little bit of background into how you got into venture capital and specifically the prop tech sector?
Sure. Yeah, thanks. First of all, thanks for having me. It's always a pleasure, and I'm excited to be here. So my background is, I'd say, like a little bit traditional and a little bit unconventional in how I got here. Only insofar as I started very conventionally. I was out of college working in the technology industry, albeit as an investment banker for Frank Quattrone at the previously mentioned, or at the formerly named CSFB Technology Group, which was really the center of the technology ecosystem for capital raising at that time. The venture industry was small by comparison, and companies would go public a lot younger. And so I was working with early stage companies really kind of at the moment I graduated college, and I loved it. I love working with founders. I just find their energy, their enthusiasm, their positivity about what they could do differently, very compelling. But I, of course, like many people, have a particular kind of type of founder I like working with, which are those like really grained in reality and trying to leverage technology to create differentiated, defensible products. And so, I just started early. I ended up going back to business school. I worked in middle market private equity for 5 years to confirm that I really didn't want to do that. My passion was always with founders and innovation. And so in 2009, I started Prudence, and Prudence, for almost the first 10 years of our existence, we had the backing of a single high net worth family, and we were just trying to make one good investment at a time. And I would say that we always had a preference for early stage companies, and we just learned we just through iteration, what kind of company is a true Prudence business, what attributes of the founder, what attributes of the opportunity. And it really, it just takes some time to understand who you are as an investor and what kind of companies fit your mandate. Now, for us, I would say what was very important was that we always just wanted companies that were pushing the boundaries of innovation, but that generated real results, and companies that could demonstrate that they could eventually subsist and, quite frankly, do well without outside financing, right? And for us, that is really ultimately the goal of all this, which is to create fundamentally strong, differentiated businesses that can survive on their own and not need people like me to provide capital like the type we provide for them to exist. So, I'd say I got here kind of, again, somewhat conventionally, and then somewhat unconventionally, in that instead of working at a large venture capital firm, I just started making investments with the backing of a single family. But then over time, we just, like most people, we started raising outside funds. And I can maybe pause there and then kind of tell you how we got into prop tech and the built world specifically, but that's how I became an investor. At this point, I've now been investing in early stage technology companies that's a longer time than I was expecting to say. It was for 15 years.
Yeah, that is a great intro. Thanks for that. And I've just so many follow-up questions from there. But my first question is, you mentioned the built world. And I think some of the listeners today might ask, what does the built world mean? I think it's probably a more relatively coined phrase from that perspective. What is the built world? How is that slightly different than just prop tech? So how do you define that?
Sure. Look, I think, prop tech built world, a lot of these phrases are used interchangeably, but the definition of those terms is hugely important, particularly when you're talking to investors who invest in the categories. Um, we take a view that, the built world is, technology that intersects with kind of real physical assets, or the process of finding, acquiring, renting, buying, renovating, you name it, those physical assets. And so that can encompass a lot of different functional needs, whether it's workflow for software, whether it's marketplaces for transactional type work, or whether it's tech-enabled services. Specifically, the end markets, though, cover anything that's built. And so that does include everything like you would imagine, single family residential properties like the ones that Hemlane takes great care of with on your platform, to large multifamily and office buildings in densely populated urban centers, to strip malls and hotel and hospitality locations throughout the world, to then industrial locations and warehousing, and then increasingly to areas of infrastructure um, like as you could imagine, with all the AI conversations happening nowadays, the compute required coming through data centers, and then the energy generated from those through the construction of energy and utility, particularly some of the large scale utilities like the new forms of solar energy production that are becoming more and more kind of pervasive throughout the world. And so it's quite a large landscape of companies to invest in, which requires us to be laser focused. As a consequence, I'd say like nowadays we do a little bit less on the residential side. We do quite a bit more on the construction side. Construction is a category that we're spending a lot of time in. And then, traditional like commercial real estate, we're spending a lot of time in these days. And that kind of goes through some cycles too. And it's not just the economic cycles that impact that. It's just the quality of entrepreneurs trying to solve big problems that we meet. That will always dictate where we invest because, absent that prerequisite condition, there's not an investable opportunity.
Yeah, absolutely. Gosh, I have so many industry questions now that
Go
the
for it. Yeah.
industry is so broad, from construction to commercial to residential to even talking about utility and data storage. First, I want to talk about mindset and how that changes, because I know when we initially met, residential was much more of a focus. Talk a little bit more about, through time and through investing, potentially some trends or mindsets that you had of this is how the industry should operate, or these are the types of companies I should invest in, and how that potentially changed over time just through your role of investing in companies, seeing what works, what doesn't. What are some things that were kind of gotchas where you learned and said, actually, my mindset has changed on the innovation front?
Sure, sure. Yeah, I can give the example of Hemlane. When we invested in Hemlane, I think it's a um, really clear case of how we think and how we underwrite. And as you well know, I'm probably repeating a lot of things that you would intuitively understand, but for the benefit of your listeners, um, single family residential property management, we knew to be a massive sector. I think it was approximately $58 billion a year generated across 120,000 different property management companies that had an average of 3 employees each. Right. And so it's just the ultimate long tail sector that has an important, but probably a non-differentiated service offering that is objectively expensive. And that result of that was that 70% of landlords chose to not use property managers. They chose to do it themselves, which was really fascinating, particularly for someone like myself who has owned and been a landlord of property. It's the last thing I actually want to do. So why are 70% choosing to do it? It's because of cost and service offerings. And so it was one of these really interesting setups where you looked at the capabilities that existed out there, and it turned out that the solution was actually in between. It was the solution in the middle that was a combination of great technology and tech-enabled services to kind of meet the needs of the customers where they are. Some just need technology for automation to cut back on some of the manual tasks of getting their property listed, getting tenants verified, getting leases signed, getting rents collected. Some, and that's by the way, a lot of needs to solve with software. But of course, Hemlane could solve those. But then there's those who have more needs that would consider using traditional property management, move in, move out services, some of the actual tenant showing, the lease ups, the maintenance when something inevitably goes wrong, which requires to have requires there to be a human in the loop. And how can you deliver those in an efficient, effective way, which again is something that Hemlane has solved. And so it's really about seeing the size of the opportunity, the solutions in the market, and the extent of the pain point, and can it be solved at a price that a customer, and that a lot of customers, quite frankly, are willing to bear. And that's kind of, as you know, that was the analysis that we did. But we're always, those words I just used, the acuteness of the pain point is something that, if you're sitting inside an investment committee meeting at Prudence, we are just hammering home on the acuteness of the pain point, why the solution is relevant now, can it be delivered at a compelling price that generates a strong margin for the company that we'd be looking at who's providing that solution. And we're just fixated on all those attributes. Really, the only way you can do that is to invest in companies that have some form of track record, right? They've got customers, they've been in existence for some period of time. And so for us to be able to answer those questions, we almost rarely find it at the seed stage, which we did with you. But it's more typical to see us investing at the Series A or the Series B. And we tend to, as a firm, be fixated less on the name of the round and really more on the stage of the company. What have they built? What have they proven? What is left to be figured out? And we like to just really narrow the scope of what is left to be figured out. And generally it's, can they take on large sums of capital and replicate the success they've had, right? And if we can narrow the scope of what we're focusing our due diligence on, really the unanswered, but can be, I'd say, logically inferred from historical data, if we can narrow the scope of that, we've done a great job in de-risking what is otherwise a very risky asset class to be investing in. And so, I know that's a little long-winded, but that's kind of how we think. And hopefully that's helpful. And happy to answer any follow-up questions to that.
No, that's great. I think the de-risking is a really important part and kind of leads to my next question, which is on construction, because obviously at Hemlane, we focus, repair coordination has been huge for us in making sure we can provide it with really strong reviews and a consistent process for both the owners and managers of the real estate, but also the tenants. It's important for them both to have a great experience. You've also seen a huge opportunity in construction. And for us, we obviously are subject matter experts on the repair side. But when it comes to actual construction and renovations and building and development, it's been a space we haven't gone into because it's not something that we can at this moment in time consistently do and streamline and provide that level of service that when we sell it, we know we can achieve the right results for our customers. You've seen something in the construction space most recently. You're investing a lot in it. What are some of the coolest technologies that you've seen in that space, and why did some of that mind shift change from residential to construction?
It's a really great question, and one that involves a little bit of, let's say, segmentation of construction. So when you think construction, people could think of, just we'll say the building of homes, the building of buildings, but it can also be the buildings of large scale infrastructure like roads, railways, airports, data centers, power generation facilities, military bases, and the like. And so generally, the bigger the scale of the construction project, the more sophisticated the contractors need to be. The more sophisticated the contractors need to be, the more they value solutions that drive optimization, and thus their willingness to use software that unequivocally works is actually quite high. And so we have, if you look at the segmentation of construction solutions that we've invested in, they serve the largest and most sophisticated enterprise general contractors and specialty contractors, because those are the ones that hire lots of civil engineers and mechanical engineers, people who are technical, right? To build something is actually quite hard and complicated. It's much more I'd say challenging to build something to manage something that's already built, if that makes sense. Um, in some respects, not all respects. Like if someone deals with mold, like that's a problem.
It's organic growth. It's not called mold. It's organic growth until it's tested.
Oh man, I love geeky jokes. So good. So that's where you'll see us. I mean, I'll give you an example of a company that we recently invested in called AI Clearing. They ingest the imagery that large general contractors, create by flying drones, LiDAR-based drones over large-scale infrastructure construction sites, and they can ingest the imagery, which are in the form of something called a point cloud, and be able to identify what they're seeing in the images, as well as overlay that with the construction plans in order to be able to tell you in real time whether or not the construction is being done right and is on schedule. Right. Those are two things in large scale infrastructure construction that you can't do with a
Yeah,
human being. And you
yeah,
can't do that just by looking at an image of a drone. You actually have to know precisely what you're looking at. And you can't do it fast if a human being needs to go in and look and identify and label objects. And so it's a great application for artificial intelligence because you have these novel training data sets that don't exist in the public domain. And you have AI models within this company that they've developed that can figure out exactly and precisely what you're looking at and are intelligent enough to overlay that information with what was specifically built in the original design specifications and which was scheduled to be built, over the preceding, day or days since the last drone flight. Super technically complex, adopted by very large general contractors working on very large construction sites. Like for instance, when you're building utility scale solar, you could have 1 million components out in the field to be installed. Actually keeping track of what is there, what has been installed, what's left to be installed, whether they were installed right, and whether they're installed on time is really, really complex. And a computer can do all that analysis, provided that it's been trained with the right data very efficiently. A human being, not so. Right.
yeah.
So that's why the intelligence is artificial. It's the intelligence that a human being could theoretically do over a very long, extended period of time, but just can't do with the same level of precision or speed as a computer can do.
Yeah.
So
So
that
many.
that to us is super, super interesting.
Yeah, and it's super interesting and so many additional questions on it because, Hemlane, we've always had this viewpoint in the residential space that it will still stay the mom and the pops. You always have institutional there. Anyone can use the platform, but the platform doesn't become the manager. The manager or owner is managing on the platform, and we're making their process so easy and streamlined that you don't have to consolidate into one brokerage that does all the management. In other words, you empower everyone to be able to do their own management and get the people on the ground they need. With construction, this is really interesting because the examples you provided are very B2B. In other words, to large general contractor construction companies. What do you see in like 5 to 10 years in construction? Do you see there being a consolidation of general contractors into, larger businesses? Do you still think that or do you think that these technologies will go down and be able to service all of those general contractors that are out there that are very geo-specific? How do you kind of envision and seeing the industry form over time?
I mean, it's an interesting question. And it's one I'm probably, not in position to opine on too credibly, other than to say that there is undoubtedly a delineation of, we'll say, early movers of technology adoption and laggards. And you can usually see that with kind of the core systems of record that have been adopted, because there are some newer, more modern systems of record, ERP systems, and then there's some legacy ones. And when you have a more modern system, more modern ERP system like a Procore, it's really easy to layer on additional applications because Procore is a modern company. They have an open API. They want people to build on top of their platform. And that's really smart of them. It's really easy to plug in any application because it just further reinforces the centrality of Procore in that ecosystem, and it makes their platform extendable because you
Yeah.
can extend it to the best applications that Procore has said, look, we're not going to build everything. And that is the modern day way of building things. Whereas, you see in other parts of commercial real estate, like the property management systems, they're closed or they're kind of like open, but with a lot of caveats and asterisks, costs,
Yes.
complexity to integration. It's intentional friction.
Yeah.
That's what I at least think. Um, because I think they want to own the whole pie, right? They want it to be kind of the walled garden. And so I think in construction, coming back to your core question, my sense is that the companies that are leaning into technology are going to continue to have advantages. And those advantages might seem small today, but I think they'll get larger and larger as they're able to say things like, oh, by the way, we can manage all the change orders that are happening, because I know Procore doesn't do that very well, but there's this other software that we can layer on, and we can keep full transparency across the vertical stack, all the way down to the specialty contractors. Even you can have specialty contractors that sub out some of their work, and it rolls up to the general contractors, to the property, excuse me, and then to the property owners and to their investors. You can create such transparency of information that people can really be kept in the loop, understand what's going on, measure metrics in real time. And so I think, will it result in consolidation, or will it result in, the winners winning more, right? The winners taking more because they're that much better at integrating technology into their workflows.
Yeah. Yeah. And I think that question of closed versus open is a huge one to be debated. And not every industry is the same. And it's also, are you B2B or SMB, and how does that experience look? So being mindful, I think, for any entrepreneurs listening to this, is definitely something to think about. And then as a customer, what is the right model for you? My next question for you is pretty broad, but what do you feel are some of the biggest challenges facing the prop tech and built worlds in the next, 5 to 10 years here?
Yeah. Whew. So there's a lot. I mean, look, I think our sector has a credibility problem. There's no question about it. I mean, the too many suboptimal companies were funded, too many capital intensive, transaction intensive, literally like using venture dollars to create specialty finance companies. Too many of the companies in our sector like went public via SPACs and have traded way off and have no business being public companies. I think, we as central participants in the ecosystem, we take seriously our role in supporting this ecosystem. And that means making good investment decisions, both at the time of investment, but as stewards of your capital and as board members of these companies, and making sure they make good decisions. Our sector needs to create legitimate public companies that can stand on their own 2 feet on a more regular basis. And there's a little bit of this like hot potato-ness that I think needs to go away, as people are, gathering assets and throwing money around. And it's just like couldn't be more opposite to what we do here at Prudence. I mean, we make 10 to 12 investments per fund. We just try to really intentionally limit ourselves to the absolute best opportunities we see. We keep the bar high, and then we spend a lot of time with our companies. And I think, if others do the same, I think the sector will attract more capital from generalists. I mean, you hear this in generalists, like we just don't invest in prop tech anymore. And it's disappointing because they've had a bad experience with it. But that doesn't mean that this sector, which is the largest global contributor to GDP, which is one of the last to adopt technology, is uninvestable. It just means that dollars were poorly allocated, you know, perhaps by inexperienced investors, perhaps by people who are in sector specialists who didn't understand the nuances. But that doesn't mean that it can't recover from that. And I actually look back at some of the early investments in fintech. The early fintech companies, the darlings of the fintech 1.0 sector were, companies like Lending Club and Prosper. And it was kind of taking offline activities and moving them online. But fintech 2.0 is much more interesting, right? That's when you had the Stripes of the world, the Coinbases, that you had the squares. You had companies that were really driving innovation in the sector, that were more technical solutions, that were solving pain points that people wanted. And you've seen just an unbelievable wave of innovation. And I think prop tech will follow a very similar trajectory as fintech 2.0.
Yeah, well, and I think it's phenomenal and a great opportunity for Prudence, who has invested in the prop tech space, done well in it, seen what works, what doesn't, especially with some of those lofty valuations. And when the Warren Buffett quote, when others are fearful, be greedy, and vice versa. So that's, I think, almost great news for you, especially at the early stage. I want to.
I will add to that too. I'll just say, and like I love that quote by Warren Buffett, and I'm grateful. I studied him, and been to Omaha for the annual shareholder meeting. And I will say the thing that I like kind of take away from a lot of the logic of Warren Buffett is like, just kind of stay in your lane and know what you're doing. And I think, whatever's happening outside of us, like what I'm most proud of Prudence, we stay focused on what we do best. And we try not to let outside influences. If everybody else is running around saying, let's do SPACs, we're not doing SPACs. We're it's like, we're not SPAC investors, right? We're not all of a sudden growth equity investors. Like, we're early stage investors, and we work with our companies. We stay very focused on them. We stay very focused on what we believe is truly prop tech. We don't take kind of, we'll say, like, egregious definitions of what prop tech is. And I just think we do what we tell our investors we're going to do. And by the way, it's harder than it sounds, because things come at you, right? When you have capital, things come at you, and you just have to be very diligent and deliberate about saying no to things that are just outside of your mandate.
Yeah, exactly. And I think that mandate and subject matter expertise, to your point, are so important, because the second that you go into the next shiny thing without understanding it, it's always gonna bite you at the end. I want to talk about, because this is fascinating with COVID, how much it sped up a change in living and working environments. And that was something that no one had expected. And so suddenly, with office space and commercial, it's very different. I know commercial is a huge category, and office space is just a portion of it. But talk about how you guys see that and think about investing in that, knowing more people work from their home or can live farther away from their home because they're not commuting as much. How do you think about that in the future and in 5 to 10 years? And what's the balance there? Does it go back to in-person work, or how
Yeah.
do you think about that?
Yeah, I mean, look, the hardest part of like any, we'll say, role in venture is this like notion of future casting. Like we're like the modern day fortune tellers, that we know exactly what the world's going to look like, and we see things that other people don't. And I think, some people get a little bit carried away with that. I mean, I think we intentionally didn't have a strong view initially on, like, when COVID happened, and it was actually like this euphoria. I mean, after 20 years of like commuting, it was like really nice to wake up and not commute to the office. But I also just kind of instinctively felt like it was less productive, and I wasn't enjoying it over time as much. And the novelty wore off. And some of the great CEOs, I remember talking to Robert Refkin about this like 2.5 years ago, and he said, I would short any company that goes remote. It is the killer of cultures. And he has just been dogmatic about bringing back. And we've talked to all of our portfolio companies about bringing people back. And so, yeah, maybe it's like 3 days a week, but I think ultimately productivity matters the most. Like, we are in this to build companies that have a reason to exist, that solve problems, and can do so better than their competitors. That their competitors are outworking them, then, boy, that's a problem. And if at the core of that is not being able to track productivity because you have a remote workforce, that's something that probably gets changed. And so that's a long way of saying, I'm not sure that we're actually going to see anything that's all that fundamentally different by the time kind of the long tail of COVID plays out. And I think there is a long tail. We're already back to okay, we're in the office 3 days a week. You can probably work from home on Friday, and Monday's optional. And It's slowly getting back to five, and I can't predict the future. I don't know if it's going to go back to five. It's going to stay at four. I don't know what a deep recession would do to that. And so I think there's probably a long tail to the COVID impact, but my sense is that the world is going to increasingly look like it did before COVID eventually. And so we haven't made any like future work bets, at all. Because there's no way we can have the kind of conviction that one would need to make a 10-year bet on something that might be done in 4 or 5.
Yeah, yeah, most definitely. What,
I will say this, what COVID did that I think was significant was it did shake up what people needed in their home environment. And it did cause people to make some really hard, tough decisions about the quality of life they wanted, insofar as where did they live and how were they raising their families. And we certainly felt this acutely as a family of four. And so I do think it accelerated a migration pattern in the US that had already started, kind of away from higher cost, higher tax, more highly regulated municipalities and states to those that were lower tax, lower cost of living, probably better weather, like
yeah,
in the Southeast and Southwest. And I actually think that that's a real thing. Like I think that's a real thing, and I think companies will just adjust accordingly. And you'll see like larger satellite offices, and
yep,
you'll see cities like, Nashville, Charlotte, Atlanta. I'm not as much on the Austin train as some people, but I like Austin, but just to visit. And so I do think people will migrate to other areas. And by the way, executives will be okay with that because it's the cost of having operations in those localities is lower than New York, Boston, Chicago.
yeah.
So I think you will see, a continued like migratory pattern that existed before COVID, that got exacerbated during COVID, and that has, probably lessened, but still is a real thing today.
Yeah, yeah, most definitely. And I love that we're definitely seeing that here in our offices at Hemlane as well, of was 1 day back, now 3 days back, etc. Um, I want to switch on over to other technologies. So my question here is like, what technologies do you believe will have the most significant impact on the real estate industry in the near future?
Yeah, it's the short answer is it's unequivocally the ability to utilize data. And that's for everything, right? From how you build, how you figure out what to build, how you build it, how you then lease it, manage it, utilize it, finance it, and ultimately dispose of it. So it's unequivocally data. And in what form is that data collected, optimized, used to train models? Does it inform humans? Does it inform bots, or some combination of the two? Is a huge theme at Prudence and something we've been consistently investing in. Part of the reason that it's hard to do in our sector is what I just generally call very incomplete tech stacks across so much of the industry, in particular commercial, but also construction. The tech stack is in flux and there are gaps. And so we are investing in the gap fillers, we'll say the middleware layers that enable these systems to be more properly built and to interface with one another, and then have the ability to layer on additional applications, all of which is to optimize processes, workflows, and the creation and capture of data. And so ultimately, that's like my short answer. But I can be less vague if you'd like me to.
I would be remiss if I didn't ask, what about AI? And you spoke about AI clearing, but on
Yeah.
that data side, you definitely need structured data and all of that. But how do you think AI impacts the industry, and what are some of the coolest, latest technologies you've seen there?
Yeah, look, AI is the natural outcome of what I just said, right?
Yeah.
And so it's the prerequisite, and it's the core ingredient. And again, whether these are bots or humans in the loop, bot assisting humans, right? That all is a form of artificial intelligence. I do think, I mean, look, Hemlane's a great example. We deliver a ton of services on to our customers, particularly those that pay at the highest tier of complete, which is our highest tier package. So many of those services that we deliver will either completely or predominantly be delivered autonomously without human intervention. I think the mortgage industry, ultimately, what are you talking about? A human being wanting to borrow money to buy a house. That human being, from a mortgage perspective, consists of a lot of data. That data gets input, it's collected, it's run through underwriting, it's ultimately approved or not. It's transactions or contracts are signed, and then money flows from one party to another. That is a predominantly digital process, and it doesn't require so many humans in the loop. So will there be an autonomous mortgage or pretty close to one? 100%. No question. I mean, exactly. The questions are like when and by whom. Those are probably the more vexing questions, and we have some investments behind that and think we've got like the eventual winner. But you have to build a lot of infrastructure to map workflows to then be in a position to capture the data to be able to build the automation. And so there's a sequencing here that you can't skip. It's not like you're just going out and grabbing knowledge from the internet and training a pre-trained transformer to replicate human intelligence. It's different when you haven't had the actual training data to train a process to be automated. And so like we, in many cases, like we'd love to invest in companies like AI Clearing, vertical AI companies that are the full stack solution for a specific vertical pain point. In other instances, there's no substitute for having to actually build the workflows and then capture the data from the workflows to be ultimately able to train the models.
Yeah.
Right. So it's, we love vertical AI, but we still love certain types of vertical SaaS that either create the barriers to or the moats from AI-based disruption or create the the prerequisites to build the AI automation on their own. And that's a huge theme of ours. And it's not something we talk about so much publicly when we invest in a company, but that is core to our underwriting.
Yeah. You've formulated these themes. You also know so much about the industry and have visions of where the built world is going. How do you stay informed about the developments in the prop tech industry, cut out all the noise of the companies that really don't know what they're talking about? And are there any resources that you'd recommend?
Yeah, I mean, it's I think the the role of like a VC or venture capitalist, right, is to synthesize a lot of different sources of information. Um, Oftentimes the dots aren't connected until we meet a founder who's specifically working on something and their view and their product connects the dots on disparate pieces of information. So you just have to be kind of constantly curious, and that involves understanding pain points. All right, well, how do you understand a pain point? You have to understand processes. How are things done?
Yeah.
How do people feel about how things are done? And people are generally not shy to tell you. So we're very tightly linked with the industry participants, but we're also very tightly linked with, and we were, as I forgot to mention earlier, when we initially were generalist investors, we are technology investors first, and we are sector specialists second. Right. So we built that specialization just through years and years of investing in this sector, but we don't come from the sector. And we think that's a good thing. We think that's really important because that enables us to cross-pollinate our knowledge build of what's happening in other sectors, right? That whole kind of diatribe I went on about the tech stack, that's because we've worked in other sectors. We know what a modern tech stack should look like.
Yep.
Right? We know what missing components are from what other sectors have done successfully. And then there's analogies to the kind of build companies that we'll find in the real estate sector to other sectors that have either succeeded or not, right? And so we're kind of informing our thought processes through sector knowledge, generalist technology knowledge, and understanding and being able to answer these critical questions. Why is this team the right one and why now? And so it's a multifaceted synthesis requiring you to ingest a multitude of data points, not always have a clear view, in fact, of where the world is going. But when you meet somebody who has a vision of how their product fits into the future state of the world, you at least are prepared to potentially correctly synthesize that information.
Yeah. It's hanging out with smart people then,
Yeah.
as well.
Yeah.
That's
And
great.
as an industry, 30 to 40% of the time, people get it wrong. Right.
Yeah.
So, all of that to get it wrong, or hope to get it right 60 to 70% of the time.
Yeah. Great. How do you think our industry can contribute to broader societal goals such as sustainability, affordable housing? You see that so much in the news, and then just look at industry trends. How do you think we can contribute there, and what are some of the cool technologies out then?
So I take a somewhat narrow view of what I personally am capable of influencing in this world. I know some people think that they can unequivocally change the world, and I applaud their belief in themselves. I kind of take the view that in my little corner of the world, I'm going to be really, really efficient and thoughtful in allocating capital to technology that needs to exist and that customers are willing to pay for, and to create companies that are durable. If I do that, then I am just hopefully a more efficient cog in an otherwise inefficient wheel. And I'm trying to do my small part to make the world a little bit more efficient. So we don't specifically look for technologies that, quote unquote, make the world better, but we're really happy when they do. And I think you have to be dogmatic about the former to be able to then celebrate the latter,
Yeah.
because that means the latter will work and that everything is set up the right way for that success. And a great example is in like solar energy. With the marginal cost of producing solar energy is now the cheapest form of energy generation. How amazing is that, right? I'm so glad that's the outcome. I don't think a venture investor had any capability of bending the cost of manufacturing solar cells for that to be the case, right? That is large scale industrialization of photovoltaic cell manufacturing that has largely occurred in China, where the cost of labor is dramatically lower, right? There's no venture climate dollars that were going to ever solve that. However, how do we now get more solar farms built? Well, that's where AI clearing comes in, because they can unequivocally ensure that the cost of that they play a small part. They're not, they're not, their small part is making sure that when those solar farms are built, they're built properly the first time, so you don't have to do reworks, and that they stay on schedule so you don't have overages, and that you can deliver the energy when you're contractually obligated to. And so you can kind of fulfill that promise of a greener future by keeping construction on track, right? That feels good. And it
Yeah.
feels good because we know it works,
Yeah.
right? And it works for the right reasons. It saves contractors time and money, gives them better visibility. They can communicate to their investors, they can communicate to their lenders. They can say, this is on track and it's being done right, or this went off track, but we found it quickly. And took corrective actions. We'll still be okay. We'll still be able to deliver our electricity on time as contractually obligated. And that's important.
Yeah, that I love that story. As solar is such a good example. It goes on to a follow-up question I have for you on that, of unconventional sources of inspiration or industries basically outside of real estate that have influenced some of your investment decisions.
Yeah, it's a really, really interesting question. I think what I've learned is um, here's what I'll say. Um, my inspiration is that is largely been learned through a combination of successes and failures, to just be honest with myself about what I know and what I don't know, what I can do and what I'm unlikely to be the best at. right? And I think that's important because I think we're all ambitious. I think we all have big goals and dreams. And I think we all want to think we can do a lot more. And I'm not saying I constrain myself. I mean, you've known me for a long time, Dana, right? But we get after it at Prudence. There's no doubt. Like we're very high energy. We're very ambitious, like everyone you would ever speak to on this podcast. Um, but I think we have learned through our experience that I think keeping our views of ourselves, having a high degree of humility, understanding that there's a certain degree of luck and variability in both our successes and our failures
Mhm.
is important. And I think that keeps us in our lane, probably where we should be. So sorry, that's not the best answer, but it's just I think we have very honest conversations with ourselves as a firm about what we're like, are we actually the best investor for this? And if we're not, we don't pursue it.
Yeah.
We think it's better left with somebody else. And again, we're trying to be a really efficient part of a cog of a wheel. And I think part of that is like knowing when to say no and being honest with yourself when you are just not the right person to make a certain investment.
Yeah. That goes to my final question because I do think like sources of inspiration and answering that it's like knowing what you're good at, knowing what you can do and how you can impact the world with that, which is actually pretty big, but staying in your lane and knowing how to do that. If you had one piece of advice for your younger self in venture capital when you had first started, what would that be?
Don't specialize too early. I think it's good to be a generalist early on. I think it's tempting when you're young to specialize in something because you can become, what you lack in experience, you can make up for with very specific knowledge.
Mhm.
Um, and I think that you'll probably do well, like early on in your career. And the question is like, will you actually be good when you're at the senior part of your career? And I think that learning as much as you can when you're young, having as broad of an experience, and then naturally gravitating towards what you are truly intellectually stimulated by a little bit later on in your career is a good pivot if you can pull it off, I guess. Maybe we're not also fortunate, right, to have that work out exactly like that. But I'm just like really grateful that I was a generalist for a while. I see the bigger picture. I understand how a variety of different technology companies have been built. I've seen success and failure across other industry sectors. And so as we've gotten just hyper focused on the built world over the past 8 years, we bring to bear a lot of experience outside of our sector. And so I would encourage people to have as diverse of an experience as possible early on before becoming just hyper specialized.
Yeah, I love that. I think it also just relates to anyone out there in the work world. I think when you start out young, you think I'm just going to move up like the corporate ladder or go straight up to leadership in one specific department or industry. And I think that this really relates to if you know a lot about and you move from like marketing to operations to all of to every single department, you become once you do move up, a lot more able to answer questions or see how all the puzzle pieces go together. And I think that's the same thing from your perspective on the industry side. So I love that answer.
I'll actually throw out a couple more while we're at it.
Great.
Let's go with some bonus rounds here. Um, so I worked. I was like in college. I did like an internship in the White House in the Chief of Staff's office. It was like a mind blowing experience. And I remember Robert Rubin was Secretary of the Treasury, and he did this little talk to the other White House interns, and somebody asked him, like, what's the key to your success? And, which I'm really grateful that person asked that because his answer was great. He was like, I don't know. I don't. I never thought about my career ascension, my career progression, but I do know that whatever I had in front of me, I did it well, and the rest took care of itself. If you're someone who can be given a task or have a task in front of you and you do it great, you give it everything, you go the extra mile, you're precise, you're detail oriented, you'll get more work. And people who are given more work get more responsibility. And you don't have to over engineer upward mobility. I think the cream rises to the top. It was a really great way to just simplify the task to a young person. Like, how do you be successful? It's just be successful in small increments every day and just do it very consistently. And that's something in Prudence we constantly preach about. Let's not worry about the next fund, the next company. Let's just do what we're doing well every single day. We'll find our next great investment. We'll give the best advice to our portfolio companies, and ultimately we'll take care of our LPs by doing that.
I love that. Well, thank you so much, Gavin. If any listeners wanted to reach out to you, what would be the best way for them to connect with you?
Reach out to Dana Dunford and I'll let her vet them. And then, I'm kidding. But anyway, I'm always on email, gavin@prudence.vc.
Great. Well,
But
thank you.
also, if you want to go email Dana, Dana's a great vetter of people. So,
And that's Dana@Hemlane.com. Well, thank you so much, Gavin, for being on the show today. Loved learning more about everything from the construction and prop tech world to AI. So thanks so much for being here and look forward to the next one.
you bet, Dana. Always great to chat.